Hi and welcome to this week's Property Insider video. This is the last of our regular weekly shows where Dr. Andrew Wilson and I give you lots of information about our property markets and our economy and some informed commentary which, when looking back, was pretty accurate. We didn't have the property crash some people predicted. We didn't have the economic Armageddon that some people predicted. Well, we're going to give you a roundup of what happened in the property markets today, as well as some good news about employment figures, and all this is going to bode well for a great year in property in 2021. So if you want to keep up to date with what's happening, please subscribe to this YouTube channel and click the little bell icon so as we bring you our weekly shows, YouTube keeps you informed. Well, will we ever see a year like 2020 again? Just when we thought we had this coronavirus thingy under control, look what happened in Sydney. But at least we know we're heading into a post-vaccine world in 2021. Clearly, the outbreak of cases in New South Wales reminds us that we're not out of the woods yet, either with our health or economically. However, in these weekly shows over the last 9 months, we argued that the impact of COVID-19 on the property markets wouldn't be as severe as most commentators were suggesting, and that the recovery would be relatively strong and fast. Each week, Dr. Andrew Wilson rationalised that the Australia's fundamentals, economically and property-wise, were sound, and that he said this was just a pause in our property markets rather than a dramatic disruption. Much of the uncertainty of the direction of the economy generally, and real estate in particular, is now giving way to growing confidence. We're returning to normal conditions, and not necessarily a COVID normal, as some were suggesting. Conditions in general, we've now got to see what's happening in New South Wales, looking like they were prior to the pandemic intervention. Of course, we're still going to have some pre-COVID economic challenges, problems like stagnant wages, low inflation, low productivity. And clearly, some Australians have been adversely affected health-wise, while others have lost their income or their jobs have disappeared. And some businesses are going to have difficulty surviving. But there's certainly cause for a positive outlook moving into 2021. And I believe we're going to have a great year ahead for our economy and for lots of businesses, and particularly for our property markets. So I'm looking forward to the last of these regular weekly chats I've had throughout this year with Dr. Andrew Wilson. Let's catch up on what's happening to our property markets. And he's also got some good news for our economy and our employment figures. Welcome, Andrew.
Yes, thank you, Michael. It just shows you can never take anything for granted in life, can you? And we thought, I guess, particularly in New South Wales, that we had the COVID issue beaten, but it's something there that's very insidious and remains uncontrollable, perhaps to a certain degree, particularly as you suggested in a pre-vaccine environment. But let's see how this pans out firstly, and maybe in a way, even though it's very, very sad for those people who have had restrictions on family reunions, which they were looking forward to, now they can't do that. That's very sad. But at the end of the day, this is a quieter period in our economy and our housing market. So let's hope that this is controlled in coming weeks when we do enter the real part of next year with a bit more confidence. And if we can, Michael, it'll be really a big tick for New South Wales and Australia in being able to at least combat these outbreaks when they occur.
New South Wales has got the confidence, though, of what happens when you get out of these downturns, just like Melbourne has. So at least there's some precedent. Now, Andrew, I know we're going to talk about property, but I'm also keen to hear what's happened to the latest unemployment figures, because Australia's economy seems to be surprising many economists. So what's going on in the world?
2020, as you remarked, Michael, has really been an extraordinary year in terms of the roller coaster, not just for our property markets and our economy, but unfortunately for controlling the coronavirus. But we certainly finished the year off on a high. Markets have been building momentum generally through the second half of the year, and really some extraordinary results considering we're just 6 days before Christmas and the break, and our weekend auction markets onwards and upwards. And this is probably the strongest finish we've had to a year, considering how close we are to that Christmas break. Sydney listings down, of course, that market is starting to ease and move into the holiday period, but another strong clearance rate in Sydney, just under 80%. Remembering the last 3 weekends have been over 80% in Sydney. Melbourne auction numbers didn't really ease that much in Melbourne, nearly 900 auctions, and Melbourne had one of its highest clearance rates of the year. In fact, in terms of the numbers of properties sold under the hammer on Saturday in Melbourne, that would have been close to the best result for the year in terms of the volume of sales. that Brisbane market now, can you believe a clearance rate over 70%? That's quite extraordinary, even though listing numbers were lower. But that's a very hot market at the moment, Michael, that Brisbane market. And Adelaide and Canberra continuing on with very strong results that they've had, particularly that Canberra market where no surprise listings were down also. So an extraordinary finish to the weekend auction market year, Michael, and with relish and hope with our coronavirus issues under control when we resume in February, buyers and sellers will be, I would expect, in that same mood, particularly in Melbourne, which is still being driven by the opportunities lost through the shutdown period in spring. If you look at the Sydney market's trend, it's been onwards and upwards quite steadily and holding at around about that 80% mark over the past month. Top performers in Sydney, Central Coast, Lower North, the Northwest and the Northern Beaches all had strong clearance rates well above 80%. Top property sale reported in Sydney on the weekend. Number one, Wolseley Road, South Coogee, over $10 million there, top sale. And we know that the luxury market in Sydney has really picked up over the second half of the year, and more strong results there reported on Saturday. Melbourne, roller coaster ride over and really settled down in the mid to high 70s clearance rates over the last month. So very much a positive market for those prepared to put their houses under the hammer, and they're good results there. Nearly 8 out of 10 chances of sales on the weekend in terms of auctions. Top regions in Melbourne, the inner east, the southeast and the west. Those lower priced areas are probably being charged by first home buyers, as we've discussed. And the inner east is starting to pick up on increased activity and demand in the luxury end of the market in Melbourne. Top sale in Melbourne reported was at 76 Leopold Street, South Yarra, over $3 million there. And in those inner suburbs, we've also seen quite a consistent spread of prices at the higher price points in those leafy inner Melbourne and Bayside suburbs. As we do every week, Michael, we look at the weekly tracking of daily listings, and we can see no surprise that's falling away quite sharply now. These are seasonal impacts, of course, as the market starts or pauses for the holiday break. However, when we compare it to the same time last year, new listings are actually tracking still well ahead of where they were in the last week of the year last year. So again, reflecting that return to the market from sellers, particularly those Melbourne sellers, as the shutdown restrictions were eased over October. We can see new listings down Sydney and Melbourne again quite sharply. A lot of that decline, of course, is reduction in auction listings, because we won't see auctions now being scheduled for at least another month. But very interesting, the Brisbane market keeps charging ahead, and new listings were up 16% over the past week. Again, reflecting on that very strong Brisbane market, with other capital city markets moving into holiday mode with new listings. And we can see now that the Melbourne new listings compared to Sydney is 75% more new listings last week compared to Sydney, and Brisbane is now ahead of Sydney as well. It has been tracking ahead of Sydney in terms of properties newly listed for sale over the past week. Total listings, we saw, interestingly, total listings rising quite strongly in Perth over the past week, but total listings really have been quite flat. So those predictions of listings and properties for sale remaining unsold and creating high levels of listings, we just haven't seen that. And there's been a settling of the number of properties total advertised for sale. We can see again, the real-time seller data, and that's what I'm talking about now, is seller data. We'll go back to that. These are, total listings, and we can see our total listings rising. So newly reported sales, we can see Sydney just easing in terms of the newly reported sales over the past week. Still at reasonably high levels for this time of the year, but that market moving into holiday mode as with listings. Melbourne continuing to record quite strong numbers of new sales over the past week. That's really held its own and risen strongly and held its own over the past month. But Brisbane's a real star of the new sales or newly reported sales models. So again, a very strong result for Brisbane recorded over the past week. If we look at new sales, Brisbane up 9.2% over the past week, and Adelaide up 36.5%, and generally flat for new sales everywhere else, certainly down a bit. And as I said, those holiday impacts on new buyer activity. So if we look, Melbourne's tracking last week, nearly 15% more new sales reported in Melbourne compared to Sydney. Boy, has that turned around that relationship over the last 2 months. And Melbourne now leads both in new listings and new sales. So let's have a look at the economy, Michael. And last week, well, firstly, the share market, of course. And we really were on track to get back to where we were pre-coronavirus in terms of the peak of the market. We'll see what happens in terms of investor sentiment as a result of those state border closures to New South Wales and concerns over the spread of coronavirus in Sydney. But that may act to impede that result where we did get back to where we were prior to the coronavirus. But it's just extraordinary that the market has moved back to that level. And again, it reflects on what you said in your opening comments about how quickly our economy has recovered. And that, of course, reflects investor sentiment, how quickly that's recovered as well. Australian dollar, well, that's remarkable. We're now over 76 cents, the Australian dollar, reflecting interest from international investors, of course, but also other factors are involved there, a weaker US dollar, although that US dollar has strengthened and so has the Australian dollar. So another positive, obviously, in terms of demand for the Australian currency on an international basis. Now, last week, we had the unemployment numbers released for November. We saw a fall in the unemployment rate after an increase over the previous 2 months. But as we've explained, that a lot of those return to workforce and increased job creation, the relationship between those two measures had created higher unemployment rates notionally. And we can just see that since the end of the shutdown period in autumn, Australia has bounced back, as you said, Michael, created well over 700,000 jobs nationally since May, and we've had nearly 700,000 return to the workforce. And it's the difference between that 695 and 748 that gave us that 2.4 in the unemployment rate over November. So always important to look at what's happening with the participation rate and jobs found to get a more robust insight as to how the labour market is performing. We saw Victoria's unemployment rate fall marginally, fall. South Australia's fell, and so did Western Australia. New South Wales was steady, so was Queensland. If we look at the job creation over November, no surprise that in catch-up mode, nearly 100,000 new jobs were found in Victoria. Strong result also in New South Wales and Western Australia. Queensland's workforce actually eased over November. But if we look at the participation rate, that is the change in the actual volume of the workforce, again, a huge result there in Victoria with another nearly 100,000 finding their way back into the workforce over November. So more good results, more positive results in terms of jobs growth and our workforce getting back to a more normal volume, reflecting participation rate. So let's have a look at how our workforce, the number of employed, has changed since March. Just about back to where we were in New South Wales, Queensland and South Australia, just a shade behind the number of employed back in March. Victoria, no surprise, still down 2.1%, but certainly moving quite strongly to catch up with the other states. And look at Western Australia. It now has a bigger workforce or number of employed than it did pre-coronavirus. Some very positive numbers there. And if we look at the participation rate, and this is the number or the percentage of those in the workforce, those with jobs and looking for jobs compared to the total population. And we can see how now, in fact, New South Wales is higher than where it was in March participation rate. Queensland is the same. South Australia is still lower, and Western Australia now higher in terms of its participation rate compared to where it was back in March. Victoria catching up fast and obviously will continue to rise and not that far away from where it was in March. So some very positive news again there in terms of our economy and our employment market, Michael. But of course, we need to wait and see the impact and as the current issues in regard to the shutdown, as that evolves in coming weeks.
Well, clearly it's been an interesting year, one we won't forget. I remember at the beginning of the year, there were the bushfires and there was those issues in the Middle East, and I thought they were going to be the big stories for 2020, and look what's transpired. Fortunately, we've come through it much better than many of us had anticipated. So, Andrew, I wish you and your family and all our viewers a Merry Christmas and a happy, healthy and prosperous 2021. We'll be back after a short break every week here again, and I look forward to seeing what happens in property in 2021. Thanks, Andrew.
Thank you, Michael. Another interesting year, and perhaps a bit too interesting, really. If we think about it. That's the nature of humanity, and it's always changing.
Wasn't that a Chinese curse? I wish you an interesting year.
Yes.
That's right.
One of those, that's for sure.